All right, hey everybody, this is Scott here again with my next live trading video. Today is Friday, May 6th, and in this video here, I'll be showing you how I'm going to manage a few of my wheel strategy positions, which are definitely not looking too good right now given this massive recent stock market sell-off. And I'm going to show you guys, if you are also in a similar position, how to basically avoid assignment and also continue the short put option portion of that trade and also collect a little bit of extra money at the same time. And moreover, I do also have some short strangle trades that are part of a little experiment that I've been doing where basically I'm selling strangles on things like SPY or IWM, major market ETFs, every single expiration cycle. So also today, I will be taking some action on those positions as well to, again, extend duration for those trades and collect some extra money at the same time and ultimately bring my risk back into alignment. Now, as always, though, before we dive in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. All right, so first off here, let's take a look at my new core position. This is NUE. And essentially, most of my wheel strategy positions are on stocks like this that are involved in the production or the mining of different kinds of metals. So in this case here with Nucor, they're involved in steel production. I also have a position on Alcoa, which is AA. They're involved in aluminum, and also FCX, which is involved in the mining and production of copper. And as I've said in previous videos, the reason why I'm so bullish on these kinds of stocks is because I do personally think that metals, given inflation right now, are going to continue to steadily increase in price, and that should hopefully bode well for companies that are involved in that space. Now, that being said, however, unfortunately, as of the very recent past here, all these equities have not been performing very well. Right, as you can see for Nucor here, for quite some time, this stock was steadily marching higher pretty much every single day, every single week. And as a result, my position was looking very, very good. But like I mentioned, in the past couple of weeks here, everything has unwound by a significant degree. And so essentially now, if I come over to the trade tab, so you can see my actual position right now, currently I'm in the May 20th expiration cycle with 14 days left to go. And so essentially, once we do get to around 2 weeks prior to expiration, this is when I'm very likely to make an adjustment or essentially roll out my position to the next expiration cycle. Because if you wait too long and your option is very far in the money, for example, let's unfold this tab real quick here. And as you can see, there is my single put option with the 145 strike. And right now, this option is almost a full $10 in the money. Right at the current moment, Nucor is just under 137 bucks per share. So like I was saying, if you do have a short option contract that is in the money, and if you wait too long or if you get too close to expiration, you do run the risk of getting assigned early on that contract. And given that these stocks have come down by so much, I personally do not want to get assigned and have to buy 100 shares of Nucor at a price of 145. Now that being said, there are still 2 weeks left until expiration. And of course, during that time, Nucor may very well recover back above my put strike here. But again, I don't want to run the risk of getting assigned early and having to buy shares at a very, very bad price. So therefore, if you want to extend the duration of your trade and take in some extra money while also reducing the risk on your trade, and therefore you'll see less volatile fluctuations for your position, that's where you can actually roll out your trade to the next expiration cycle. And to do that, we're basically going to buy back my existing put option here at the 145 strike. And then I'm going to sell the same or very similar put option in the June expiration cycle. And as you'll see here, we're going to do so for an additional credit. So now let's come back to the monitor tab and find my Nucor position right there under the wheel strategy category. I'm going to right click on this position right here and then go to create rolling order and then go to sell 1 calendar NUE, blah, blah, blah. Click on that. And now as you can see here, I have one order that will do two things at the same time. We're going to buy back my initial May 20th 145 strike put option. And then also I'm going to sell a new contract in the, if I change this, the June 17th expiration cycle. And if I also keep the strike exactly the same at 145, as you can see here, I will collect an additional $347 of credit. And then moreover, if we come back up here and take a look at my initial May put option, the delta on this contract is around 70. That's a high degree of risk on this contract because this means for every $1 move of NUE, the price of this put option is going to change by about 70 bucks. But now, if we scroll down to the June expiration cycle here with 42 days left to go, let's unfold that tab. The 145 strike put option in this cycle has a delta of only 61. So basically this means as Nucor moves in price, the price of this June put option is going to move by less than the price of my May contract. And that's what gives you less risk on the position. Now also in some cases, if your option is not too far in the money, you can actually change your strikes when you roll out and still collect a little bit of extra credit. So for instance, coming back down here to my order, if I change my June put option to, let's say, the 140 strike, as you can see here, I still would collect a little bit of extra credit, about 30 bucks. So now in this case, by moving my strike of the put option down by 5, I'm therefore going to give myself a much better price to potentially get assigned at and buy 100 shares of Nucor at. And moreover, the delta on this contract is only 54. It's even less than the delta on the 145 strike option. So ultimately, it's up to you as to whether you want to collect a lot more credit when you roll out, or if you want to use most of that credit to still roll out and change your strikes and reduce your risk on the trade by a lot more. And so in this case for Nucor, because I'm still very bullish on this stock, that's why I'm going to go with the route of rolling my option out and keeping my strike the same, and therefore collecting a lot more extra credit. Right, so initially my starting credit on this trade, when I first sold that May put option a while ago, I sold that option for about 560 bucks. And now if I can sell this June option by rolling out my contract here and collect an additional 300 or so, that could bring my total credit over well over 800. So with that being said, we'll come down here and change my June put option strike back to 145. And I'll try and get filled pretty quickly here. So I'll come down to maybe a credit of 350 bucks. And then we'll go to confirm and send the order. And there we go, just got filled and actually price improved to 400. That's awesome. So there you go. I've now moved my Nucor position to the June expiration cycle, giving myself an extra month of time for this stock to recover. And in doing so, collected an additional 400 bucks of credit on top of my initial 560. And I've also reduced my risk on the trade by a little bit as well. And also, of course, I can't forget, I have avoided the possibility of an early assignment. And so that was just for one of my wheel strategy positions. I do have a few more that I do need to roll out, but the process is basically the same, so no need to show you that. But also, like I mentioned earlier in this video, let's now come over to IWM. This is an ETF that tracks the Russell 2000 index. And like I mentioned, I'm also running an experiment where I'm selling strangles on big name ETFs like IWM and SPY every single expiration cycle. And so as you can see right now for this trade, I'm short the 187 strike put option, which is now, as of today, pretty far in the money. And then also the 197 strike call option here. So once more, because this is also in the May expiration cycle with only 14 days left to go, I'm beginning to run the risk of an early assignment if my put option stays far in the money. Although right now that contract is only a few bucks in the money, so that risk is very, very low. But still, I want to roll out my position here to the June expiration cycle, hopefully take in some extra credit and reduce my risk on this trade here. So once more, let's come back to the monitor tab and find my IWM short strangle here. We'll right click on that and then go to create rolling order. And this time I do have a few options here, but for the purpose of rolling out to the next cycle, I'm going to sell a double diagonal in IWM. So click on that. And here we go. This brings up a more complex order involving 4 contracts where essentially, same as with my Nucor trade, I'm going to buy back my initial May contracts, both the call and the put. And then at least right now with the way this order is set, I'm going to sell the exact same contracts in, let's change the expiration date, however, click on that and go to the June expiration cycle on June 17th. There we go. And so if I keep my strikes exactly the same, I will collect a very nice additional credit of about $480. However, that being said, I definitely don't want my put option to still be in the money when I roll it out to the June cycle. So first off, let's come back to the charts real quick and take a look at IWM. And we'll go ahead and zoom in a bit on this chart. And then I can assess where I want to change my strikes here. And so keep in mind, currently my call strike is right there at 197. Which I do think is going to offer some overhead resistance given this nice overhead supply right here. Right, basically, I think that if IWM can muster the strength to get back up to that price point, I do think there's a good chance it would get repelled off that point. So therefore, I think I want to keep my call strike the same, but definitely want to move down my put strike, which currently is at 187. And so far, IWM has made a low of about 180. And perhaps at this point, we are beginning a major downtrend in the Russell 2000. So at least, at minimum, I do want my put strike to be below 180 here. So with that said, we'll come back to the trade tab and change my strikes accordingly. So again, for my new call option in the June cycle, we'll keep my strike the same at 197, But for the put option, let's definitely move that down a little bit. We'll try maybe 178. And as you can see, I would still collect a small additional credit of about 90 or 100 bucks or so. Moreover, let's scroll down to the June expiration cycle and check the deltas on those new contracts. So again, for the call side here, it's going to be 197. Delta is 24. And for the put side here, if we go to the 178 strike put, the delta is 38, a little bit larger. So ultimately, because the delta on my put option is larger than the one on my call option, that means this new strangle here in the June cycle is going to have a bullish bias to it, which I definitely don't mind given how much IWM has come down in the past few days. Again, mostly what I want to do here is just to rebalance my risk on this trade so it's not so one-sided to the downside and hopefully collect a little bit of extra money as well. So now with that said, we'll come down here and change my price. We'll try and come down to maybe 90 bucks and see if I can get filled right away. Go to confirm and send the order. And there we go, just got filled and price improved to 94. Awesome. So there we go. Once again, I have extended my trade duration here, reduced my risk substantially on this position, and took in some extra money at the same time. Moreover, one more thing I want to mention about the concept of rolling here. If possible, it's a great idea to do so when implied volatility is elevated across the market. So ideally, if you can wait for a short-term sell-off to occur and for IV to spike, you're going to be able to roll your positions for more additional credit. So essentially, to give you a visual sense of that, let's come back to the charts and then we'll go to /VX. And these are the volatility index futures contracts. And what they do is they show you the implied volatility for the S&P 500, which basically implied volatility, in case you're not aware, is simply a measurement of uncertainty about the future for, in this case, the S&P 500. And implied volatility or uncertainty and fear tends to get very elevated when stocks sell off, which is what we've been seeing for the past couple of days here. And as a result of that, option prices will increase substantially. So for instance, right here on the VIX charts in the past couple of days, let's zoom in a bit, we've seen a substantial increase in the implied volatility across the entire market, and therefore a substantial increase in option prices. So again, in cases like this, you will be able to roll out your contracts for a bit more in additional credit. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.